Hey, this is Matt Carbray, Ridgeline Financial Partners. This is Matt on Money, April 2021. We hope you all are doing well as we start to make some advances with the vaccines and we start to get back to some sort of normalcy in the life that we were accustomed to living. We hope you and your families are doing very, very well. What we hope to talk to you about today, and hopefully you'll get some very good information, is first, let's talk a little bit about the tax filing deadlines. Let's further talk a little bit about some of the tax proposals that are being talked about and what the potential is for some of those various different pieces of legislation to be implemented. Let's talk about everybody's least favorite subject, which is budgeting, the importance of budgeting, regardless of where you're at in your life as part of a comprehensive financial plan. And let's last talk a little bit about cryptocurrency and the craziness that is going on right now in that marketplace. So thanks for tuning in. This is Matt on Money, April 2021. Okay, as some of you may be aware, the tax filing deadline, which historically falls on April 15th, has been pushed back to May 17th. Now, for a lot of people, tax preparers, financial professionals, we are appreciative of that additional month, given the fact that a lot of statements have not been put out in a timely fashion or as timely of a fashion as they have been in the past. So people are getting a little bit more time to get their tax documents together to file their tax return. It's important to also remember that the tax filing deadline also does provide you the opportunity to extend your return 3 months and potentially as many as 6 months. Remember, as of today, the tax filing deadlines, which are July 15th and October 15th, have not been extended 1 month further. That could very well change, but the likelihood is that those traditional extension dates will still be the same as they have been in the past. An extension to file your tax return is not an extension to pay. So if you find yourself owing income tax, understand that that tax needs to be paid by the tax filing deadline. For those of you that are self-employed, you own a business, or you have underpaid taxes in the past, the estimated tax payments, hopefully you've made those by now. There was not an extension to make a payment based on the quarterly payment schedule. So April 15th was the date in which those payments had to be sent out. If they were not sent out, I strongly encourage you to get on that as soon as possible. When we talk a little bit about what the current tax landscape looks like, it doesn't look much different than it's looked in past years. A lot of the major tax legislation, whether it be the Tax Cuts and Jobs Act, the Secure Act, the CARES Act, version 1, 2, 3, and 4, we've seen a lot of substantial tax changes, but we haven't necessarily seen anything in the last couple of years. There is a very strong possibility that we do have sweeping tax changes that could alter the individual income tax rates, the corporate tax rates, estate tax levels and corresponding rates, as well as capital gains. There's a lot of speculation about how that's all going to shake out. I'm not going to give you my personal opinion today on what I think is going to happen because it's still a little bit premature, but there is a very strong possibility that we do have substantial change. And why are we going to have substantial change? Because we have midterm elections coming up in 2022. And right now, with the Democrats having all three branches of government under their control with the deciding vote by our vice president in the Senate, this is really the opportunity that they haven't had in quite some time to get through some groundbreaking tax legislation. I will tell you, leaving aside what I think rates are going to go to, that we have to start preparing ourselves for higher income taxes. Not necessarily across the board and not necessarily for a majority of Americans, but for higher net worth individuals. We may have a short window between now and the end of the year to take advantage of the laws as we know them today. Okay, now we're going to talk about something that not many people enjoy. It's kind of like that annual visit to our physician, that every 6-month visit to our dentist. I actually enjoy those visits. But with that being said, no one enjoys the exercise of doing a budget. A budget, Matt, do I really need to do a budget? The answer to that is yes, although I'm going to give you a different idea here. And I'm going to talk about a strategy, and I don't know if it's been trademarked. but it's something that I have long communicated to our clients, and it's called backwards budgeting. Now, what's backwards budgeting? Well, backwards budgeting is backing into the expenses that you should be in a position to afford after you've done all the things that you need to prioritize. Now, what I mean by that is, well, we need to prioritize the various different goals and the funding associated with those goals. So one goal may be retirement. That's a very common goal for a lot of us. Another goal may be funding a child's future education. Another goal may be setting aside money for a second home purchase, charitable endeavors. So what we advocate for our clients is to first determine what is the savings level that you need to do to realize those various different goals. So for argument's sake, if we were to take a couple that had future educations to fund, they wanted to ultimately retire, and we arrived at a need for them to save $40,000 a year for retirement and $20,000 a year for those future educational expenses. That combined amount of $60,000 is what they need to build into their budget as a fixed, immovable expense. And everything above and beyond that could be used and should be used for funding their needs, wants, and their wishes. Needs, again, are things such as utilities, food, property taxes. Wants are, I want to go on vacation twice a year. I want to take the family and I want to have it cost on average $5,000 per trip. Wishes are that I want to take a once in a lifetime travel the European continent vacation and I want to take my whole family at a cost of $30,000. So categorizing expenses into needs, wants, and wishes is incredibly important. But instead of going line item by line item and categorizing and putting a dollar amount equivalent next to each of these, why don't we look at this and do it backwards? Let's start with the levels in which you need to save at. Let's then determine how much is left over. And if you find as though that with what's left over, that's enough to cover your needs, wants, and wishes, then great. That's kind of, I think, a backwards way of going about it. If you find as though you're not in a position to meet your needs, wants, and wishes, well, the wishes may need to be postponed, and maybe some of those wants need to be curtailed or scaled back a little bit. So that's a way for you to think about budgeting in a little bit of a different light. Let's start with what needs to be saved, and let's work with the difference. Okay, now onto the subject of cryptocurrency. I can tell you that I spent 4 hours over the weekend playing golf, and about 3.5 hours were on the subject of cryptocurrency. And the knowledge base for individuals is all across the spectrum. Some people have a really good handle on it. Some people have absolutely no understanding of it. But what I will say to you is that cryptocurrency should be redefined, because I don't think that cryptocurrency operates at all like a currency. And an example that I'll give you is if I had a dollar bill hanging in my hand here, and we fast forwarded 3 to 6 months, I think we all would agree that if I still had that dollar bill in my hand, that it would still be a dollar. Now, it may be less valuable or more valuable to other currencies that are used throughout the world, but you wouldn't ever make the case, or you could never anticipate that dollar had gone and now it's worth $3. Well, with some of these cryptocurrencies, that's exactly what has happened. We have seen incredible price movements to the upside in these cryptocurrencies. I think what you're finding is that instead of the retail investor looking at that as a storage of value, as a hedge against inflation, as something used as a substitute for how gold has been used, you are starting to see the institutions come in and buy major sums of this. So there is more of a perceived stability with the currency. Maybe there's even a little bit more of a trustworthiness. But what I will say to you, much like anything else in your portfolio, is you have to understand the risks associated with cryptocurrency. You have to understand that this is an incredibly volatile investment, and that much like all other investments within your portfolio, moderation, diversification are always going to be very, very important. So if you want to better understand the cryptocurrency environment, we'd be happy to answer whatever questions that you may have. I will say that it's not something that I personally invest in. It's something that I do believe in, and I think it could be used if it's done in the right way. But you just have to fully be aware of how these cryptocurrencies work, what's underlying the fundamentals that are backing it, and as well understand if you were to invest into something like this, where do you store it so that it's safe, and how do you eventually monetize it and turn it into a currency that's more frequently used, such as the dollar. So this has been Matt on Money, April 2021. Thanks for tuning in. We'll catch you next month. Please feel free to follow us on social media. Please also reach out with any questions. My email address, Matt, M-A-T-T, @Ridgeline, F as in Frank, P as in Paul.com. You all take care.